To talk about Russia and its business environment, we're now joined here in the studio by Kingsmill Bond. He's chief strategist at Troika Dialog. Good to have you on the show.
Thank you.
Your Russia strategy outlook for 2010 is called the year of disinflation. Care to elaborate?
It's a very powerful theme, disinflation, and we've seen this across the world, in Brazil, in Indonesia. When inflation falls pretty rapidly below 10%, markets tend to react extremely well because profits are higher and PE ratios are higher, and as a result you get outperformance. Now, we're now seeing a similar dynamic take place in Russia. Since the fall of the Soviet Union, inflation has never been sustainably below 10%. But for the first time in 2010, we believe it will be. And that creates a very different environment for the stock market.
Talking about the stock market, the MI6 index already has gained more than 120% over the course of this year. And you see further upside potential?
Well, yeah, I think the bounce back this year was all to do with the reversal of the panic, and it's been widespread across a series of additional markets. The question in 2010 surely is one of settling, and the markets are going to be searching out those countries and those environments which can continue to grow and which have their own powerful domestic stories, and Russia has one of those, we believe.
Indeed, though, there has always been the criticism that Russia is still too dependent on the energy cycle, on the oil price, and that's not going to change overnight. So what kind of investments are you looking for kind of sectors? You said domestic.
No, I think, to be clear, Russia remains dependent upon the global cycle, remains utterly dependent upon the oil price remaining above the $60 level. Our argument is based on the thesis that the oil price does stay above that level, and under those circumstances you get both disinflation, but there's a number of other domestic drivers. So you have this modernization agenda which the president has been talking about. You also have the return to capital markets for the first time in a number of years. We'll see a charm offensive coming out of Russian officials next year, and then finally you have improvement of geopolitics. So the rapprochement with the West, Russia's continuing shift to the East, to selling oil and gas to China, that will all create a better environment for this market, which, let's be clear, is trading at 8 times 2010 earnings. So it's a fairly fertile framework, an interesting framework for the market.
Talk a bit more about that charm offensive.
Well, I think we're likely to see the government led by Kudrin coming to London in the spring, looking to raise debt capital for the first time since 1998. Again, there's a lot of firsts taking place in Russia next year. You're going to see maybe $20 billion of capital raising coming out of a series of corporates. You're going to see bond raising. So again, I think we'll see a more positive take on the Russian story materializing in 2010.
What I find interesting, we had like 9 interest rate cuts since April, and they have still failed to revive bank lending and revive industrial production until actually the last numbers came out, which showed an increase in November. But still, that was tied in with commodity prices. Why is domestic lending or domestic industry still sort of struggling?
Well, I think it's in a large part to do with the way that the government caused devaluation to take place, which made people convert their money into dollars and created an atmosphere of fear, shall we say, within the country. That's now been put behind us. We've seen the ruble appreciating quite significantly, and we're actually looking, as a result of that, for lending growth next year in the order of 10 to 15%. And certainly Russia doesn't have what the United Kingdom and the US have. It doesn't have a large amount of debt, so household debt to GDP in Russia is under 10%. You can get a lot of lending coming through.
Just though to throw that in, I think it's the first time in a decade that there will be a budget shortfall.
Well, again, on the fiscal deficit that Russia's facing next year, to put this in some context, the government's got a fiscal deficit, has debt to GDP at the moment of about 9%. This is a number which Gordon Brown would kill for.
Yeah, you're right.
So therefore, for them to add, let's say, 3 or 4% to that next year is not an area of any concern.
Okay, right. We have to leave it there. Thank you so much.
Thank you.